Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today, I'm speaking with Alejandro Cifuentes. Alejandro is the Director of Asset Management at MMG Bank in Panama. He's also a portfolio manager that focuses on mostly high-yield fixed income in Latin America. So I'm going to talk to Alejandro today about Panama's economy, MMG Bank, and Panama's banking industry, and then we're going to get into some of the high-yield markets that he's investing in. So I think it's going to be a really interesting conversation. So hi, Alejandro. How are you?
Hi, Patrick, and thanks a lot for having me here.
Yeah, I'm really excited to have you on. Panama is a really interesting market, and I think you sit in a great place to provide some really interesting insights for my listeners. So before we get into the Panama and the high yield stuff, can you tell everyone a little bit more about your background? Where are you from? Where'd you study? How'd you end up as an asset management director in Panama?
Sure. So I was born and raised actually in Panama City, Panama. I went to school here, but then I went to college in the US. I went to Florida State. I did my bachelor's and my master's in finance. Then I stayed working in the US. When I was 25, I decided to move back to Panama City just to be closer to home, be closer to family. And I've always had an interest in everything that's been investing. Quick story here. When I was in high school, my brother used to be a trader, a broker dealer. That was a Colombian broker dealer, but that had offices in Panama. They used to offer these simulating accounts just for your trading. And I used to get account. It was a 3-month trial period. I always get the 3-month trial period. And I used to just look up all the companies. I used to play a lot of video games. I used to build computers myself. And I remember one of the first stocks that I bought was AMD back when it was around $2. So that's the story here. And I've always wanted to pursue a career. I think it's always been for me. So when I came back to Panama City, I talked to I sent around, I think, 1,000 resumes to everybody that worked in the industry. I had a couple people answer back. My previous employment, it was a multifamily office called Athena Partners Group. Then 2 years after, actually, MMG Bank was a place where I applied initially. Then they called me 2 years in my previous job, and my current boss, when we were sitting for a coffee, he asked me if I wanted to be a portfolio manager. And then I just started growing the business, growing the department, and here I am as director of asset management.
So tell me a little more about MMG Bank then. Obviously, you have a asset management division, but what other services do you guys offer?
Yeah, so the asset management is the last part of the business that actually got started. It actually got started, let's say, back in around 2007. So MMG Bank is actually a private bank. It's one of the few private banks out of Panama City, Panama. We mostly do private banking. We have a full bank license, but we don't really do retail banking, credit cards, mortgages, none of that stuff. Everything is centered around investments. We have an investment banking division where we structure and underwrite either syndicated loans, public issuances, emissions, public IPOs, but everything is centered around how to do financial consultants, to become financial consultants or do financial advisory for clients. So you might have a client that has a portfolio or an investment portfolio with the bank. They might need a loan. We will structure that. Or maybe they own a company that wants to issue debt, and we will help them with that. So everything is centered around capital markets. I think that's where our strength is. We don't really try to compete like a Bank of America does with a huge balance sheet, right?
Right. And so your client base, is it mostly Panamanians, or do you guys get a lot of international clients as well?
I would say because of where we are located, we're mostly Panamanian clients, but a lot of Latin American clients that don't want Latin American risk. Just because the Panamanian banking sector is very resilient, it's very independent from whatever is happening in the country. A lot of clients from Chile, Colombia, Brazil, Argentina, they will come and have some of their offshore assets in Panama, and they like the dollar, right? So instead of just going to, or maybe because we do have a bank located in the US, you can have American jurisdiction out of Panama City. You don't have to travel all the way to Miami to meet with your banker. You can just do it in Panama, which is a couple hours away, instead of having to fly 6, 5, 7 hours, right?
Yeah, interesting. And Panama is one of the most friendly, if not the most friendly country for international banking clients, right? I mean, Brazil doesn't even allow non-residents to bank, for example.
Yeah, Brazil has very strict capital laws. So does Colombia, right? Panama doesn't really have currency controls or any of that. And since we have the dollar, it's very friendly. Inflation in Brazil or inflation in Colombia, which is around 9%, is very different than 2% inflation in Panama or 3.8% inflation in the US.
So then can you maybe tell me a little bit about the banking industry, like in general, the competitive landscape? Where does MMG fit? I mean, who are the biggest players? What kind of services are most popular then for banking in Panama?
Yeah, so I would say as a start, Panama's banking system was extremely international. So there was Citibank, Scotiabank, JP Morgan, Chase Bank here actually. There were a lot of European banks. That's changed a little bit. Now it's more a regional bank. We still have some international banks such as Scotiabank here, or the largest bank is called Banco General Bank. They're a huge bank to compared to the assets in the Panamanian economy. The banking assets for the Panamanian economy, it's around $76 billion, right? I'm talking about just credit in general. So where we fit strategically, we're, I would say, the largest investment bank in Panama. So that's what we do. So we punch above our weight. When you look at our balance sheet, it's around only $600 million, but we manage around $5 billion in off-balance sheet assets for individuals or third parties, right? So it's a very small bank on its balance sheet, but it's a very large bank of managing money. So I would say we're a very small bank competitively in loans and whatnot, but we're a very large bank when we look at managed assets.
Interesting. Yeah. So I think that gives you a great place to view Panama's economy from. So I want to ask you then, can you just tell me like what's the current state of Panama's economy? How are things going?
Sure, that's a great question. The first news that I think everybody would have read if you're looking at the region is the mine, right? So we have, I think, the newest largest copper mine in the world. It's around 40% of EBITDA for First Quantum Minerals. It's a huge project. It's a huge open skies mine, open pit, I would call it. It's a copper mine. And it was around 5% of Panama's GDP was just that one operation. And it's also the largest private investment in the country's history. It's around $12 billion of investment, right? That brought a shock to the economy, shutting down the mine, that we can talk more about it ahead. So the economy went to a halt because there were a lot of riots. So if you follow your history of Latin America, you've seen there's been a lot of riots in Colombia. Well, now the Ecuador issue, there were a lot of riots in Brazil with the transfer of power. There were a lot of riots in Chile when they increased the subway costs. Now there are some riots in Argentina, but very muted. So the region itself has been a little bit convulsing, but now Panama has gone through a little bit of turmoil, right? So Panama's economy, it's services based. We don't really export goods, or our main good that was exported was copper. It's a services based economy. It's an economy that's based out of the Panama Canal. So the Panama Canal had a lot of positive knock-on effects on the economy, a lot of services, banking services, transportation services, commerce, honestly, hospitality, retail. A lot of people come to Panama to purchase goods because we have very low tax rates. So to give you a quick example, VAT tax in Panama is 7%. One in Colombia can go up to 29%. So it's a stark difference of why that extra or the incremental dollars that you have to pay. And that's not even looking at what the importer had to pay. We don't really have tariff quotas. We have a very free market economy.
So yeah, that reminds me of a story when the Brazilian real was strong. Brazilians used to travel to Miami, and the cost of an iPhone would be cheaper, even if you included the plane tickets and a hotel, than buying it in Brazil. So it sounds like Panama gets Colombian tourists that'll come and buy a new laptop and clothes and then go back to Colombia.
That's crazy. Actually, an iPhone in Panama is pretty similar to the one in Miami. It doesn't really make sense for a Panamanian to go to the US. It's a little bit cheaper. It might be $100, maybe $150, but there's no real difference, right?
Yeah, yeah. So I think it's so interesting that you led with the mining story, right? Because 5% of GDP is a huge deal. So I guess you can't really talk about the state of Panama's economy without talking about the mining story. Is that right?
I agree with that. And I'll be happy to expand. Just a quick disclaimer. We share shareholders, or we're a related company with the mine's lawyers, right? So the mine's lawyers, or the law firm is called Morgan & Morgan. It's a related company to MMG Bank. So that's an important disclosure, I think, because I might be a little bit conflicted when I talk about the mine. The mine, well, as you mentioned, as I mentioned, it's around 5% of GDP, or it was 5% of GDP. It employs around 50,000 people, directly and indirectly, which is a huge amount for when you look at Panama's economy. It's just 4 million people, and it's 2 million of economically active people. So it's a lot of people that was employed indirectly and directly in the mine. It has had huge positive effects for the economy. I know For example, a good story that I like to tell is Caterpillar, so CAT, they 400 people, around 40% of their workforce, they fired just because the mine shut down. It was their largest client by far, but I'm talking orders of magnitude compared to the second next client. And we're talking about they also provide the canal with manufacturing, with equipment, with heavy equipment, but the mine was just too large, right? And it's actually quite problematic for us. Growth expectations for 2024 were around 4 to 5%. Now they're around close to 1% because of obviously the mine is shaving so much of the economy.
So what does that do then to Panama's government budget, right? Because I imagine that's a lot of lost revenue, not just from the mine directly, but like you said, 50,000 people out of 2 million workers. That's like 2.5% unemployment overnight. So that really, messes around with whatever models for government revenue and spending they had. So what happens next?
That's a good question. One important thing to mention, Panama is one of the few Latin American economies that are in investment grade. So it's Chile, it's Uruguay, it's Panama. That's about it. I mean, Brazil I think it's double B plus now, but it's still sub investment grade. So we're talking one of the few countries where institutional money flows into is Panama because it's still investment grade and it pays quite good yields. So that's the first thing that I have to mention is the negative watch that now the country has because now it's possibly going to lose its investment grade status. And I think that's the first negative. Obviously, it increases your cost of debt. The government was spending around 8% of the budget to service its debt. Now it's close to 17%. So it's more than double. I think that's the first effect that I would mention. The second effect, like you say so, it's the tax raises, just because of Panama, first of all, has, I think, a pretty friendly tax regime for employees. It's not as punitive as other economies. I think all in is for, let's say, good earners is around 20 to 25% of your salaries. And I'm talking about Social Security, income taxes, and then educational taxes, which are three main taxes, right, that get charged to your employment. We had to right-size our budget for 2024. A budget was presented. It was around $32 billion, and it got cut down to $30 billion. So it was close to 10% of reduction just because of the mine and the new reality, right? I think also an important thing to mention, there's elections in Panama in 2024 in May. So we're going to have a government change. And I think the new government, most of the business community is expecting for the new government to come up with a deal with the mine for us to not go into arbitrage where we're probably going to lose an international arbitrage against the mine. Something similar to Pakistan where they also had a similar case and a mine they shut down and they lost it and they had to restart the mine. So I think we want to restart the mine before we get to that point.
So help me understand then, what was the argument for shutting down the mine? Who actually benefits? Because mathematically it sounds crazy, right? To just cut 5% of GDP overnight. So who benefits, if anybody, or was it just emotional? What was the other side arguing that was in favor of shutting it down?
That's a great question. Who benefits? And I'm not even quite sure I can answer that question because I don't really know. Plainly, nobody benefits economically. Actually, we're all way worse. The first thing that I'll mention, the mine is in a corridor, right? Let's say when you look at Chile, the Atacama Desert, where most of the mines are at, it's just arid terrain, right? Panama, it's in the middle of a jungle. So the first thing that I mentioned is around 20,000 acres of just woodland that got destroyed. But this was already done, right? Surprisingly, a lot of people didn't know there was a mine in Panama until this year. That's actually quite shocking. I think the madness of the masses, it's a good point to talk about. The government has done a lot of things that were not the best things that they could have done. So people have been extremely critical of this administration. And the government had to pass a new law contract because the old contract was declared unconstitutional. The mine, they passed it through Congress. Contract was actually signed a Friday evening, which is actually quite problematic. Why would you sign a contract on an evening of a Friday? Then it got put into law, and then right after, just everybody went to riot. It's a little bit similar to what happened in Chile when they increased the subway 5 cents, and then the whole country went up to flames. There's just so much economic disparity that I think people are too unhappy. So they see any action by the government as an action that is negative for them. So everybody started rioting. The mine was a good, let's say, banner to rally with because people were critical of the government's doing, not actually of the mine. People don't really know anything about the mine. They just knew the mine was related to the government, so they were against the government, they were against the mine. And I think that worked out like that. But no, nobody benefits really. Nobody has benefited from this, right? And it's extremely uncertain where we're at right now. But I think the positive, I think everything has calmed down. People are now thinking, okay, we're shutting the mine down. Now what's going to happen? And now when we hear what needs to happen to shut a mine down, the dollars that you have to spend, the possible arbitrage, what would happen to the country, people are now backtracking and now saying, okay, let's just negotiate something else. They just keep the mine open. So that's where we're at.
So you think then, obviously, it's going to be a huge campaign issue this year for the presidential election. And you think pro-mine, it's the campaign issue, I guess, right?
Well, you have candidates that are against the mine.
Yeah.
They're trying to harness that vote. And there are candidates that are a little bit more realistic saying, hey, the mine is already there. We need to operate it. We need to work with a solution that in 30, 40, 50 years, we have a plan to shut it down and do something with that 10,000 or 20,000 acres. So that's that campaign thing where you know what's better for everybody, but people are so against it emotionally that against mine, the anti-mine candidate might harness enough votes. But when they get to power, they're probably going to hit the reality, right? It's a classic Latin American issue where you have a candidate campaigning for something that you know it's impossible to do, just like Petro did in Colombia.
Interesting. Yeah. So anything else about the mine you think's worth talking about that we didn't cover?
No, I don't think so. I mean, we can talk about the mine for hours.
I joke because, like I said, Panama doesn't get much international coverage, but the mine did. I mean, that's probably the biggest story out of Panama that I can remember since I've been covering Latin America.
We were I think, in every newspaper possible. And actually, it's a great mine when you look at environmentally what they've done. First Quantum Minerals is replanting whatever they've destroyed in the environment. They're replanting it elsewhere. We have a ton of issues of illegal activities or illegal mining activities in Panama. So this would just become, and I think one of the main issues that we talk about is if you leave this mine pit open, people can extract gold from the mine. They're just going to have an illegal operation in the mine. It's too large for you to take care of anything like this big, right? It's 20,000 acres.
Right. So you have to pay to guard it if you're not going to use it, right? Because people just going to steal it.
They say the cost to keep it shut down is between $20 to $50 million a month.
A month?
A month.
That's a lot of money to do nothing with, right?
That is a lot of money to do nothing.
For a government with what? You just said a $30 billion budget, right? $600 million a year at a $30 billion is a lot of money. Crazy. So yeah, I think too one of the reasons it got so much generating $0, right? And it could be, right? It could be generating income. But yeah, I think one of the reasons too it was so interesting is because one of the most famous, mining stocks, Franco-Nevada, it was a huge portion of their revenue, the royalty and streaming company, and they're as well followed as any mining stock in the world. So there were investors all over the world that saw 30% of revenue disappear overnight. So they were paying attention.
Yeah, it is crazy.
So are there any other industries in Panama you think are worth talking about that are maybe up and coming or really struggling? Any other sectors of the economy we can highlight before we talk about other markets in LATAM?
I think the last one would be commerce, just because where the Panama Canal is. I'm not quite sure how acquainted you are of the Panama Canal, but it's around 40% of U.S. commerce goes through the canal, which is, it's close to 50%, right? Over everything that's being shipped out of the U.S. or into the U.S. going through the canal. Obviously, we have climate change. Panama's Canal water levels are extremely low right now. When I say extremely low, we used to be able to pass 40 ships a day. Now we can only pass 24 just to keep waterways conservation. And that obviously is a huge issue of what is going on. That's hit negatively many other industries. You have that with the Suez Canal, which is the other huge canal that affects Europe. So you have like two main waterways that are being affected negatively at the same time. It's a huge disaster. But that struggle a little bit with everything that's been going on. Commerce has been hit a little bit. It's one of our main economic drivers is commerce, but where the Panama Canal is at, it's pretty worrisome for 2024 if rain doesn't start happening somehow, right?
Yeah, right. Those are two scary headlines for Panama's economy when you think about it then, right? Like not getting as much revenue from the canal and 5% of GDP from the mine gone. So it's, okay. Yeah. So
challenging year. Let's call it
a challenging year, but an opportunity for sure if things work out. Because the canal's not going anywhere, right? I mean, even at lower water levels, it's still globally important for decades to come, no matter what, right?
definitely.
So I want to ask you then, we talked a little before we got on about some of the high yield fixed income markets. So maybe just before we talk about specific markets, can you tell me a little bit more about your investment process, what kind of research you do when you look at high yield? Because you spent years as a portfolio manager before you were director of the division, like you mentioned in the beginning. So tell me a little bit about the investment process and how you do the analysis of these high yield markets.
Yeah, that's a great question. I'm director of asset management, but I'm also a head portfolio manager. So I actually still manage portfolios with my team. My team does Panamanian investments and they focus only on Panamanian equities. So you'll see an equity here and there. Bladex is one, which is it's a development export bank out of Panama. And you see Copa, which is one of our main investments, are those two. Copa Airlines is, I would say, the most important Latin American airline, to be quite honest with you. We basically transport everything from south to north and then to north to south. So you'll see a lot of air traffic from Brazil goes through Panama with Copa. They fly Panama to Sao Paulo or Rio to Panama and then up to Miami or whatever. And then with a lot of just Latin American credit, focus on high yield, I would say. And obviously, most of credit that gets issued in Latin America, it's high yield. We do mostly corporates, right? I think the first part of our process, we do more of a bottom-up process where we're actually analyzing companies. So we follow a lot of companies in the region, but we look at sectors more than countries. We look at sectors because even though you're in a bad country, you can be in a good sector. And that's a little bit strange to hear, but I think a great example of that would be Colombia. Colombia has, let's say, a president that's not friendly to the business environment for the country in Petro. I think it's more left-leaning, just the practice is a little bit more erratic. The previous president was much more friendlier. But now you have sectors that are very insulated from those issues or those headwinds, right? So we look a lot at sectors, big sectors in Latin America. I would say oil and gas, mining, refining, everything that's export driven. So it can be either protein, soy, just materials, and then financials. I think those are the main sectors that we look at, right? And you'll have like best in class investments in those sectors that could rival, for example, a US company. So a good example is Ecopetrol in Colombia. They have joint ventures with Occidental Petroleum. So it's strange when you're seeing like these Latin American companies, but have great talent in their institutions. We don't do that much sovereign risk, but we do some rising stars. So you'll see us dabbling in Salvador. We were invested in Bahamas. We were invested in Ecuador. In those rising stars, we look a lot for IMF support. That for us is really important. So let's say a government that can work with the IMF. And that's basically our process. Our process is looking at sectors that we like and what is comparatively cheap in those sectors. We do spread analysis, quantitative comparisons, because everything in fixed income is relative value. And then we analyze the companies to see if the fundamentals make sense or they match what the quantitative numbers are saying to us.
Okay. Yeah. So I want to come back to El Salvador and let's go to the corporate stuff first. So I guess let's dig a little deeper. You mentioned oil and gas. Are there any other sectors where you're finding attractive opportunities in the secondary market in high yield for corporates?
Yeah, I think the mining sector has some really attractive opportunities. I think the financial sector has a lot of attractive opportunities. When you go into the financial sector, you can split it between non-bank financials and then bank financials. A great example of a non-bank financial that just exploded were non-bank financials in Mexico. So your Unifin, Crédito Real were honestly stories of large families owning these non-bank financial companies that had a little bit more lax regulation. So you have to be quite careful and you have to know management extremely well, have good access to management. I think in the financials, when you're looking at regulated financials or bank financials, a great example is Banorte, one of the largest banks in the north of Mexico, Banco Mercantil del Norte. The bank, first of all, the management is extremely transparent. They're extremely open to talking to you. So we have great meetings with them, and they're extremely transparent what they're doing and how they're executing their plans. And you find that their corporate issuances have really good credit spreads, so they have great yields, double digits a lot of times. The issue is just liquidity. That's the thing you have to fight about, or you have to be able to trade it in Latin America is the issue of liquidity. So you have to have really great contacts that have good books for you to get in and out of positions.
So if you were putting together a portfolio of high yield assets across LATAM, what would you expect for an annual yield if you were
if you're
doing
looking
it well?
just at high yield, I would say between 9 to 12% is, I think, your sweet spot. And that's why we don't really invest in equities for Latin America, because high yield is already targeting around double-digit figures, right?
In dollars, right? You're dollar denominated.
Dollars. That's all hard currency.
That's attractive, right? So yeah, that's significant compared to yields in the US or yields in most
Definitely.
individual countries.
And I would say something interesting is you'll have a high yield issuer, 1 times EBITDA of leverage turns, maybe 2 times leverage, or maybe 1.5, but it's a high yield security, right? For you to high yield security in high yield US markets, it's around 3 to 4 times. So you're seeing way more credit risk. The issue is obviously the political risk that sometimes does affect and sometimes is over.
Right. They traded a premium, or tell me if I'm right or wrong here, but they tend to trade high yield more because of country risk than because of balance sheet risk.
Yeah, so your spread is going to have some credit risk, but then it has a large part is just sovereign risk or country risk, like you mentioned.
Interesting. Yeah, that makes sense. So sovereign risk, as soon as you said that you guys were involved in the El Salvador high yield offering, I piqued my interest because it's a market I follow closely. I think it's fascinating what's going on there. So can you tell me a little bit more about what you were doing with El Salvador?
Sure. That's a great question. Okay, the first thing is, so El Salvador, I think you have to be mindful of the headlines because there's a little bit of fluff in the headlines, right? So Bukele it's a very special kind of president. Now, his approval ratings are around 90%. You cannot fight that. I mean, he's just loved by the majority of people.
That's true, right? Because some people say, oh, yeah, in North Korea, it's 99%. But I think he actually does have 90% approval ratings.
Definitely. And if you travel to the country, and if you would have traveled there 80 years ago and you go there today, you would see a stark differences, right? So 80 years ago, or even right before he was in office, you could not leave your hotel.
Yep.
You could not walk around. That was just, you would be crazy to that. You take a car to where you're going and you eat inside of a restaurant. Now you can walk around, you can eat outside. So it's stuff that I think even in Panama we take for granted, right? So I go to a restaurant and I sit in the terrace and I'm just sitting out and I'm just looking at people and nobody's gonna bother me. In El Salvador, you would be insane to do such thing. So the security difference is stark. And obviously security is really important for a country and for the general business environment. So I think that I would buy it because he did something extremely positive for the country. Obviously, let's say he had to sacrifice maybe some freedom to do so because, I mean, he had to go a little bit overboard, but he had to take drastic measures because the country was in a very rough place.
Yep.
But I think with a personality like that, you would have to accept the other stuff that could happen, right? And I think he might be a little bit erratic sometimes. He has his own ways. I think there's a method to the madness, let's call it. So quick overview of El Salvador, just going straight to the country. So most of their debt, it's owned by their pension system. Okay. And I think that's pretty important because when you talk to pension funds, which are huge, they're the biggest, let's say, funds that fund their debt. So if he defaults on the debt, he would default on the pension of the people. That would be unrealistic to happen. And
it's akin to cutting Social Security in the United States, right?
Basically,
you're cutting everyone's retirement that they were counting on because they stopped funding the debt.
There's no Medicaid, there's no Medicare, there's no Social Security. You get $0. So think about a president that would do that.
Politically impossible. Pretty much, right?
It is impossible. I mean, it is impossible for you to go into the fall like that. It's too entrenched. So we've always had this belief that he needs to find a way and he will work with the IMF to find a way. That is just a reality. So, for example, last year we were involved in their 2023 debt redemption. It was a huge wall of maturity. Those are euro dollars. So those are bonds that are traded in just, let's say, the global over the counter. It's not local debt. So we knew he had to come up with a plan, and he did. To be quite honest, he did come up with a plan. He got the money how he needed to. He repaid everybody. So everybody was made whole. And I think that's pretty smart of him. So I think now the next wall that he has to hit is to finish working with the IMF package, finalize it, and then get it passed with a good fiscal package that makes sense, fiscal responsibility, fiscal spending, and whatnot. for him to then get a renegotiating and refinance the 2025, which is going to be the next wall of maturity. But I think that country, he knows how much to push the boundaries. I think that's a positive.
So how would you say overall they are from a fiscal perspective? Healthier than they were, but are they healthy in general or?
Yeah, I think the main issue, and I need to look at the latest figures. So they haven't published that many figures, right? I think that's a thing where the IMF has more information than you would have because they just have the local visits that they do. But he has been cleaning up the fiscal deficits through a lot of just because they've been receiving a lot of. So Salvador's main economic sector, or I would say sector, is just remittances from the US. Yeah. So Salvador exports people, right? And they have a lot of people living in the US and just send money back into El Salvador. And that's a huge source of funds.
If I remember correctly, it's like 25% of GDP is remittances.
Yeah, that is correct.
Which is huge, right?
Yeah, it is huge. I mean, it's a fourth of the economy.
So what did investors get wrong then when they were pricing El Salvador risk? Because you mentioned it's one of the ones where you get kind of these crazy headlines and fluff in both ways. One side, it's, he's the savior. The other side, he's a dictator. But those bonds traded, I think, down as low as 60 cents on the dollar, maybe lower. I didn't follow them that closely. So they were heavily discounted. So what did you see that the market didn't to make? Because you actually got a dollar on a dollar, right? You were made whole. So you were buying dollars for 60 cents.
I remember back in June, July, they were trading around 60 cents. And the bond got paid in December. So think about that, right? You would make 40 cents in what? 5 months?
Which is annualized over 100 and some percent, right? Yeah, which is...
It was insane yield, right? But I think what people got wrong, I think what investors got wrong, to be completely honest with you, they were saying, he's a dictator. He's going to do something like Putin would do. He's going to default on the debt. He doesn't really care. What people didn't understand, I think, I could be wrong. I think what they didn't understand is the pension funds had all the money in there. He couldn't default on his own people. That would make no sense. If 100% of the, say, $2 billion were owned by Bank of America clients, then I mean, he would default that, right?
Okay, but now I get it. So investors were expecting like it was like Argentina's debt that's all foreign and no domestic, because that's what they've seen for defaults in Latin America. But they didn't realize it was all domestic, and he was obviously going to pay back his pensioners.
Yes, exactly that.
I think one of the other reasons too, you can't really talk about the El Salvador story without talking about Bitcoin, because that's certainly what they get a ton of headlines for. And I think just a lot of the crazy headlines and the vitriol from Bitcoin got transferred onto him in El Salvador, which really, it's an interesting program, but it's not necessarily the story with the debt. Like you said, it was more about the IMF loan and the pensioners, right?
Yeah. The Bitcoin story, if you want to know, well, we talk to the locals there because we have good contacts in El Salvador. What they tell us, he did a Chivo wallet, which was a Bitcoin wallet. I think he gave around $20 or $25 to each person.
Yep.
Everybody just spent it and then they didn't do anything. There was nobody really wanted to keep that wallet going. There was no ownership of that wallet.
Yeah. What happens with the Bitcoin legal tender in 5 to 10 years? Who knows? But it was definitely a resounding marketing success for El Salvador, right? Like tourism, they got Twitter famous and tourism boomed 30% year over year, which is like unheard of, right? And it's a real industry for them now. I see people going to travel to El Salvador all the time. So if anything, they made a hell of a tourism campaign. Yeah,
El Salvador has great beaches actually, but it was too unsafe for you to travel there. Now it's completely safe. They do have a lot of tourism now going on.
It's supposed to be surfers' paradise. It's a bucket list destination from what I understand.
Yeah, actually, if you wanted to know a funny story, we got here, there were some people that were structuring stuff in El Salvador, and you used to be able to buy like a small condo in the beach. It's around, I think it's around like 40 minutes or an hour away from San Salvador, which is Salvador's capital. And you used to buy a token, and the token would give you ownership to your condo. So they give you the token, which was just in the ledger, and they give you the keys, and the keys were attached to the token. So whoever owned the token owned the keys.
Let's see how that, I think whoever owns the keys owns the house, but I'll show you my token. He who has the keys has the house.
That is true. That is true.
But what else in terms of the future of El Salvador then? I know one of the headlines I see is like they're going to finance a huge Bitcoin mining operation with volcano bonds is the headline. Do you follow any of that? Are there any new issues in El Salvador you're looking at, primary market stuff?
I think that's more marketing than anything else. The Bitcoin bonds and the Bitcoin City. I think it's called Bitcoin City, right?
They have Bitcoin. They have Bitcoin Beach, which, if anything, it's a tourism success. I don't know. I've never been, so
Yeah, I never been either. To be honest, the future, I mean, there's elections this year. I'm not quite sure how acquainted you are with Salvador politics, but re-election is not allowed or was not allowed.
yeah, I read
But
that.
now it is allowed. So he's going to get re-elected, Bukele. The question now for El Salvador, for the future of El Salvador, is going to be, so how long is he going to push the
Yeah,
lines or the boundaries? Because is he going to get re-elected every 5 years like Xi Jinping does in China, and then he just becomes de facto president for life? Is going to be re-elected just for 2 terms? I think the IMF wants to work with El Salvador. The IMF, in my opinion, is very wary of just leftist governments sweeping Latin America, especially now, where I think more of the global trade is going to be happening north to south than east to west.
Hmm.
So I think the US has more of an interest in Latin America. But yeah, I think that's going to be the main issue is for how long is he going to stay in power? And I think that's the main question right now. And how much is he going to push the boundaries of power? Is he going to respect the business community? Is he not? He's not the most popular person with the business community there, surprisingly so. They're not huge fans of somebody just taking power like that. And many times he's seen just as judge, jury, and executioner.
Yeah, I can see that. So, what about Panama's sovereign debt? It was one of the markets you didn't mention when we talked about high yield. So, have you
Mhm.
seen discounts on Panama debt after the mining saga?
Yeah, yeah. So first of all, Panama's debt is still investment grade technically, but it
Hmm.
is trading as a double B. So
Okay.
it's trading extremely wide now. I think we don't really trade that much sovereign debt in Panama because of the risk that's been going on. We've traded it before because there were good arbitrage opportunities if you have the liquidity to manage it, to be honest. So Panama has to go to the market next year or this year, I guess, 2024, for $8 billion. They have to raise $8 billion to repay part of, let's say, the maturities and new debt they need to raise for the government's budget. So that's pretty important. The $8 billion is not going to be an easy task right now in this environment. And I think when you talk to investors, it's mostly hedge funds that are getting lined up to buy Panama's debt. But you'll see pension funds, institutional clients that are really risk off right now, and they're not really purchasing any of Panamanian debt. And I think that's why it widened so much the spreads in Panama.
So, you think that 8 billion then it's not going to trade at a double A yield that they have to issue? They'll be paying higher interest rates because of the situation.
Yeah. So right now spreads are around 300 and change, which is extremely wide for what Panama used to trade. So it can only get wider, I think, if we don't get good news, right? Because the leverage or debt to GDP in Panama used to be around 47%. Now it's, or 42%, I guess, right before COVID. Now it's close to 60% or 58%. So Panama is getting way more levered with each passing year, right? And I think investors are seeing this and a little bit worried. One of the banks that were the most bullish on Panama's debt was Bank of America. I used to talk to them, and I would always ask them, I don't really understand why are you guys so bullish on the debt. And they used to tell us we're not that bullish. Everything just in Latin America trades so bad. So we're just more positive in Panama than anything else, relative value, right? I think that story is going to start changing this year.
Hmm. And then is there a point when you would be interested where you start to look at it, or do you think that you'd rather just wait and let the mine and the canal thing play out before you even look at Panama?
I think elections are going to play a huge role. Who wins the elections and their government plan, to be honest. So Panama's, fun fact, the country that employs the most amount of people, it's Argentina in Latin America. Obviously, it's a huge public workforce.
Yeah.
The second country is Panama. So I think Panama is going to have to do a right sizing of their
In
of
in
their
absolute
government
in absolute numbers or as a percentage of population?
as a percentage of population.
Okay. Let's say like how can that be? I was like Brazil has to have more than Panama. But okay, that makes sense. Argentina's
Oh,
insane. I remember those numbers, but I didn't know Panama was that. I didn't know Panama was that level.
well, we were talking to clients from Brazil, and they were saying, "Can you believe Brazil has 250,000 public employees? That's insane." And we were like, "Well, can you believe Panama has 319,000 employees?"
That's an amazing statistic.
Yeah, so it's more than Brazil.
Yeah, wow. So What else? Is there anything we didn't cover? That was really interesting. The overview of Panama and El Salvador was incredible. Is there anything we didn't cover that you think we
I
should
think for the
highlight?
Salvadorans, the main stories this year, one is Bahamas, but I think that's pretty much done. They have an IMF package they're finalizing. And the other one is Ecuador. Ecuador was actually doing pretty well with Lasso. He called elections. Now Noboa won, which was really positive. And I think that's an interesting story for real, let's say, risk-on traders. Because right now, El Salvador is trading around 60% yield to maturity. So it's extremely high yield, it's extremely stressed. For those who are not following that much, so Ecuador right now, it's in a state of chaos. So what did Noboa did? Noboa was pulling a card from Bukele. He was going to build a jail. Ecuador has a huge issue with drug traffic.
Mm-hmm.
And they have a lot of security issues. Ecuador is actually a very unsafe country. So what they did, or he was pulling a Bukele card, right? He was building a super jail like Bukele did in El Salvador. And he was going to put everybody in line, especially drug trafficking crimes. So two of the largest, let's say, drug kingpins of the country escaped prison, and they started a huge riot in the whole country. I'm talking like, I don't know if you've seen Twitter or the news, but
this was end of 2023, right? Or a month ago, roughly, right? Where they took over the news station with guns and everything. And
that is correct.
So you think that panic then, so that failed, right? Like he didn't succeed in getting all the gangsters to his giant prison.
Well, I think it's going to be a story that I think is going to be quite interesting, and there might be a trade here. And I'll explain why. The first thing, he took the police out because the police was too corrupt, and he put the army. He just brought the army in the country, which I think is technically unconstitutional to do so. I don't know if you can, like, think about the U.S. just bringing the U.S. Army into U.S. territory to provide security, right? That's what they did. The first thing, they took control of the situation. He raised taxes, which was something that IMF wanted to do. And now he wants to work with the IMF to do a whole restructuring of the debt. So I think he's doing the right things. He might be able to push enough reform, never let a good crisis go to waste, right? So he's going to have to be able to push enough reform that it's important enough or deep enough for you to actually make a change in the country's trajectory. Ecuador has extreme stringent financial conditions. There is no credit being passed along. I mean, we're talking about companies have to survive without credit. You can't really go to the bank and get money. It's extremely expensive.
Is that because it's dollarized, or is there something else that causes the tight credit market?
Well, the first one is regulation. Banks are extremely regulated. So that's the first thing. Also, there's no real, since Correa, there's no real business environment for banks to do economic activity. So it's impossible for them to raise money. I'm talking like extremely. So it's a country with few big but easy reforms. They can do a lot because Ecuador is a huge economy, right? And I think that's going to be interesting. So I think this crisis might be an opportunity for the government to do structural reforms. That might be an opportunity for investors to start going into the country, right? Because Ecuador, similar to Argentina, it's a country I know a lot of people want to touch.
Yeah. And you said that their debt was trading as low as 60 cents on the dollar?
60% yields. No, it's around
60% yields. Okay.
Yeah, so it's around 30 cents, 34 cents around there.
Okay, so there's a lot of room then for you to make money, even if it rewrites up to 50 cents on the dollar. It's still pretty attractive.
Yeah, definitely.
Okay, that's interesting. Well, Alejandro, this was an awesome conversation. I was so interested to hear about Panama, and then your knowledge of El Salvador was a bonus. So we'll have to do this again for sure, because these are two markets that I love to follow. But for now, give listeners a sign off, tell them where they can find you, learn more about MMG Bank, your work.
Yeah, sure. Well, thanks a lot, Patrick, for your time. You guys can follow us, I think, anywhere. It's at MMG Bank PA. That's I also have a Twitter handle, but I don't really tweet that much.
Okay.
I don't remember my Twitter handle, but you can look up beyond my name and I'm sure you'll find it. Yeah, that's it. That's about it. I mean, we're on LinkedIn, Twitter. We do some videos on YouTube talking about the Panamanian economy, but it's mostly in Spanish. That's the only issue, right?
Okay. That's fine. I think a lot of my listeners speak some Spanish and Portuguese too. So
awesome.
If they want to find you, they'll find you. Thanks again for doing this. It was a pleasure.
Well, thank you. You have a great day.
Yeah, you too.